Why was the stock market excited at first by the news from Jerome Powell of the Federal Reserve that they were thinking of maybe pausing on their next FOMC meeting on June 15th when they decide what to do with rates? The news is mostly favorable with inflation. It's not going up as bad. It seems to be pulling back. Oil prices are going down. It looks like we're in for a pause. But that wasn't good enough for Wall Street, and they started talking about rate cuts, and the tide turned. Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, I'm Stephen Fox. Welcome to my channel. The news that came out from the Federal Reserve talked about hinting at a possible pause. It was exciting for about the first 15 minutes. But about 30 minutes into the interview, after the announcement, things took a turn for the worse. Let's look at the news that came out initially, the breaking news.
A hawkish pause. Fed officials, as expected, raised their target rate by 25 basis points to 5 to 5.25%. But they go on to suggest that the longest and the steepest tightening cycle since the 1980s may be about over. The statement drops wording anticipating some additional policy firming, now saying the committee will closely monitor incoming information and assess the implications for monetary policy. In determining the extent to which additional policy firming may be appropriate, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The vote was unanimous. The economic summary notes a modest pace of growth in the first quarter, robust gains, job gains, and still elevated inflation. Lisa, don't worry about the control search function because there's no change in their estimate of the financial stability situation. They go on to repeat the U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. The committee remains highly attentive to inflation risks. And finally, no change in the pace of QT, still capped at $95 billion a month. A short, sweet statement, but it does suggest that we are going into a possible pause.
So the news comes out, and during the first part of the interview with the press after the announcement, man, we were flying along, the stock market was going up, happy days are here again. But then somebody brought up the idea, gee, are you going to cut pretty soon after that? They didn't say that in so many words, but that's definitely the meaning behind it all. What's happening with the rate cuts? And they did not like what they heard.
Of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but, we will make our best assessment, and that's what we're thinking.
What about the idea of rate cuts?
Yeah, so we on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down, particularly now if you look at non-housing services. It really hasn't moved much, and it's quite stable. And so we think demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
So he more or less is not going to cut rates until he has a couple months of data indicating that inflation is firmly under control. And that's understandable. They learned that from the 1970s and 80s. Whenever they let up too soon, it came roaring back, and they got a second and a third wave of inflation. And that's his nightmare. He's not going to let that happen. So he has to Paul Volcker it for a while. Paul Volcker just successfully kept raising rates to unbelievable levels. I think he might have hit 20% at one point. It was unbelievable. The place to have your money back then was in money markets, and the saying was cash is king. And that saying's come back a little bit. For a short while it'll be around, but it's not nearly the intensity that it was back then. So I think we're on the way to a solution here. And the Trueflation numbers, which uses more current data at trueflation.com, they indicate that inflation is going down. The Trueflation data keeps going down. It's at 3.84%, and that's the lowest I've ever seen it. And as seen by the chart, it keeps going down steadily. I've been pounding the table on super microcomputer, SMCI, for over the last year, and it's it's a wonderful stock. And they had a report that insiders had been selling throughout the year, and it gave me some doubts. So I didn't buy Monday, and I resolved, well, I will see how their earnings come out on May 2nd, Tuesday. And their earnings, they missed on revenue and they missed on earnings, but they beat the forecast. Their forecast for the full year was above what analysts were seeing on both revenue and earnings. And it was because they said that they had repaired the supply chain problems they were having. And also they were getting lots of new contracts with new innovative products, which involve artificial intelligence. I guess that's what you have to do. You got to get artificial intelligence in there somewhere. And I think artificial intelligence is coming at us hard and fast and is going to transform our lives. And we have no idea how much things are going to change in the next 10 years, maybe even in the next 5 years. That's how fast it's going. Elon Musk might have a point about warning us about how fast artificial intelligence is coming on, and are we going to be able to control it? But so I hesitated on Monday. The earnings came out. People loved the forecast. And I bought it in the aftermarket for 114. And Wednesday, the day of the FOMC meeting with Chairman Powell, it continued to go up, and it went up to almost 134. So it went up almost 20 points. Looking at the chart, it's taken off like a rocket. And the thing is, they say its true value is now 175. So there's lots of good things coming with this stock. And I feel fortunate to have gotten it in the aftermarket. SMCI's earnings growth rate is 40%, and their price to earnings is still only about 13. So it's a buy in my book. So in inflationary times like we have now, the stock market usually continues to go down even after the first pause. It tends to go down for 2 or 3 months, depending. So I don't think we're at the bottom. I don't expect the market to really go down that much. It might go down somewhat. And these are probably a time to buy selective stocks. It's not a time to buy or sell the market. And I'm not doing inverse funds or bullish funds generally on the market. I'm looking for selected stocks. and SMCI is one of those. It's come to my attention that building stocks are also doing well, building material stocks. And I think that's because commodities have come down. Lumber has come down from like $800 to below the 400. So imagine that reduces the price of building a house considerably, and construction is actually booming in some areas. So there's opportunities, and I plan to look for those opportunities and point out selective stocks, because this is not a time to buy the market generally. And the short side is limited too. So I think it's a time of wait. The Federal Reserve has put us into suspended animation, and we will come awake from this in a couple months and just remember it as a bad dream we had. But hopefully you have better dreams. I love to interpret dreams. That was my specialty as a psychologist before I retired. And I actually miss it because the dreams always told me so much. So hopefully our dreams will be fulfilled and this market will come to its senses. Thank you.